Hello students, now we will study the preparation of a comparative statement of profit and loss. Okay, this is the question as you can see. Okay, and this is the solution. Let us read the question. The question is asking to prepare a comparative statement of profit and loss. Okay, they have given the data for 2 years. Obviously, we need the data for 2 years for comparison. Unlike common size 1 year is also given. We'll take RFO as a base and then we can compute. You can see that in another video. Okay, but since we are doing comparative statements, so we need 2 years data. So the data is given. Here you see the data is not given in particular format. It's just given in a table. Okay. So the first job is to put this table in a particular format of statement of profit and loss. Okay, and put the amount, respective amount. After putting the respective amount and in the format, we will add two more columns, that is for absolute change and percentage change. The formula of absolute change is current year minus previous year, and the formula of percentage change is absolute change divided by absolute change that you get in this column divided by the previous year, that is the previous year amount, into 100. Okay, having said that, let us start to the solution. So we start with writing comparative statement of profit and loss for the year ended 31st March 2015. Okay, like you see in the financial statement. Okay, we first write the previous year and then we write sorry, we first write the current year amount and then we write the previous year. But this is not a financial statement. This is not a part of financial statement. Rather, this is just an analysis tool. This is not a thing that this is not a statement that comprise in the financial statement. Rather, this is an analysis tool. Why? Because this is a comparative. Okay, this is just analysis tool. So for that purpose, we record previous year first and then current year. So you see, we write the previous year data 31st March 2014 first and the current year data in the next column. Okay, and then we add two more column, like I said, this one and this one, that is absolute change and percentage change. Okay, once the format is done, we put this in a particular format. The first one is revenue from operation. Okay, revenue from operation, we write it. There's no other income, so we don't write other income, and hence we close this, which means this is the total income. We'll do this two column later. Okay, let us do first this one and this one. Then there's purchase of stock in trade, change in stock in inventory, change in inventory of stock in trade. So after this, we directly jump into expense. And expense, you know, CPC EFDO. C for cost of material consumed, P for purchase of stock in trade, C for changes in inventory, E for employee benefit expenses, F for finance cost, D for depreciation and amortization, O for other expenses. Okay, so let us see for C. Let us find some item for cost of material consumed. So cost of material consumed is not there, so we will not write. Then purchase of stock in trade. Purchase of stock in trade is given, so we record purchase of stock in trade. In the previous year 5 lakh 20, and in the current year 7 lakh 80. Then changes in inventory, changes in stock in trade is given for 80,000 and 40,000, so we record 80,000 and 40,000. Okay, then other expenses given 10% of cost of revenue from operation. Cost of revenue from operation. Cost of revenue from operation, the formula for cost of revenue from operation this you must have studied in class 11 under the chapter accounting equation. Okay, cost of revenue from operation is either you can write sales minus GP. This is the first formula. Next formula is you can write opening stock plus purchases minus closing stock. Okay, I repeat, cost of revenue from operation has two formula. The first formula is sales minus gross profit, and the second one is opening stock plus purchases minus closing stock. Okay, so let us see what opening stock, what closing stock, and what purchases are given in the question. Okay, so let us start with that. So where is the cursor? Yes. So for 2014, it is 8% of 8% of cost of 8% of cost of revenue from operation. Okay, and for 2015, it is 10% of cost of revenue from operation. Okay, so let us compute for 2014. Please remember the formula, or you can write it. You can go back again and then you copy it in the copy. So here the formula is opening stock, because the gross profit is not given, so we'll take the second formula, opening stock plus purchase minus closing stock. Same here, opening stock plus purchase minus closing stock. So opening stock minus closing stock can be also said as changes in inventory plus purchase. Again, opening stock and minus closing stock is also known as changes in inventory plus purchase. So changes in inventory for 2014 is 80,000 plus purchase is 5,20,000, and changes in inventory for 2015 is 40,000 plus purchase is 7,80,000. Okay, seven lakh 80,000. Total becomes 6 lakh, and here the total becomes 8,20,000. What is this? This is cost of material consumed. This is cost of revenue from operation, also known as cost of material consumed. Okay, and then this is 8%, and what do we need to find? We need to find this is other expenses. 8% of this one, 8% of 6 lakh is 48,000, and other expenses here will be 82,000. So see, we write 48,000 and 82,000. Okay, once you get that, you find the total, you add all this and write the total expenses. You add all this and write the total expenses. Then you find profit before tax. 8 lakh minus 6 lakh 48 is 1 lakh 52. 9 lakh 2,000 minus 12 lakh, 12 lakh minus 9 lakh 32,000 is 2 lakh 98,000. This is profit before tax. Tax here is given 30% and 40%. For the previous year is 40% and current year is 30%. So 40% of 1 lakh 52 is 60,800, and 30% of 2,98,000 is 89,400. 1 lakh 52 minus 60, you get this much, and 2,98,000 minus 89,400, you get 2,06,000. Once this is done, which is very easy, you have done in chapter 1 also, Once this is done, the real comparative starts, the absolute change. So you know the formula of absolute change. It is current year minus previous year. Current year minus previous year. So current year is 2 lakh, 12 lakh minus 8 lakh is 4 lakh. 7 lakh 80 minus 5 lakh 20 is 2 lakh 60. 40 minus 80 is minus 40. 82 minus 48 is 34. 9 lakh 2 minus 6 lakh 48,000 is 2 lakh 54. 2 lakh 98,000 minus 1 lakh 52 is 1 lakh 46. 89,400 minus 60,800 is 28,600. 2 lakh 8,600 and 91,200 is 1 lakh 17,400. Got this column also. Now the last column. The formula of percentage change is absolute change that you get in this column divided by previous year into 100. So absolute change is 4 lakh divided by 8 lakh into 100 is 50,000. 2 lakh 60 minus divided by 5 lakh 20 into 100 is 50,000. Minus 40 divided by 80 is minus 50,000, 50%. 34,000 divided by 48,000 is 70.83%. 2 lakh 54,000 divided by 6 lakh 48,000 is 39.2%. 1 lakh 46,000 divided by 1 lakh 52,000 is 96.05%. 28,600 divided by 60,800 is 47.04%. And last one is 1,17,400 divided by 91,200 is 128.73%. These are all are under percentage as it is given here. Okay, this is it. This and this column will need to be computed at the end, and this you just need to put it in the format. Here in this case you need to find cost of revenue from operation. There was two formula rather, sales minus GP. The GP and sales was not given. Sale was given but GP was not given, so we will not use the formula. Rather we use opening stock plus purchase minus closing stock. Opening stock minus closing stock is also known as changes in inventory. So we have taken changes in inventory plus purchases in both the cases to find cost of revenue from operation, and then there is a percentage. We calculate the percentage of cost of revenue from operation to get the other expenses. Okay. If you still have a doubt, you can ask in the comment below.